Good day, everybody. It's a guy here, the unknown, and today I want us to look at something very important. I want us to actually go through a couple of beautiful trades that happened yesterday. As you said, the community, I posted US30. That's the one I took, and I want to take you through my thought process. Why did I take that one? Okay, and what actually goes through my mind, and how you can actually capitalize from this. Okay, so guys, as you already know, this is the most explosive trading strategy for indices, and it is a straightforward strategy. Okay, which gives you the freedom because throughout the day you are free. You only come to your session at 9:30. If you're in South Africa, you are coming to your screen only at 3:30 p.m. So this gives you the freedom of having your entire day to yourself. Okay, look at this, guys. It's straightforward. You know exactly what you need when you come to your charts. Okay, because if you are trading and you don't know exactly what you're looking for when you come to the charts, you should go back and do your homework. Why? Because you're gonna lose a lot. You need to know exactly what you are looking for. If this happened, I'm gonna do this. If this doesn't happen, I'm not gonna do this. Okay, so look at this. With this strategy, the first criteria is identify trade volume before the session. At least we need 65 to 70 pips to the point whereby they'll release our traders. I'll share this with you. Okay, and then again, you need to wait for 9:30 US time. This is 9:30 a.m. US time or 3:30 p.m. South African time. And then we need to identify trap traders using a chart patterns because we don't know what they're gonna do on the day. Therefore, we need to know what the insiders are doing. Once we have information from the insiders, that's where we're gonna capitalize from that information. Therefore, after getting the chart pattern, we're gonna wait for the evidence candle. The evidence candle is the big candle that breaks out of the pattern, not any breakout. It's the big candle which closes as an engulfing candle. It's important, okay? It must be a big candle. Why? Because we are trading evidence. We need to know that they are done with their job and now they're leaving, okay? And then we target 50 pips entry and then exit. Okay, so with this 50 pips, guys, I use 50 pips because this is what will be hit. Okay, most of the time, maybe 90% of the time, your 50 pips is gonna be hit. But when you backtest, you're gonna know trades where you can target 100 pips, 150 and stuff. Okay, because there are some patterns that allow you to target 100 pips and more. Okay, so guys, it's also important to ask yourself, what kind of trend am I in? Because sometimes you'll be in an explosive trend and you will counter trend it. The kind of trends are very important, as you will see in this image, in this video. Okay, look at this, guys. Look at this. Okay, before the session begins, we are gonna come 5 to 10 minutes before the session begins, okay, provided there are no news in the session. If there are news during the session, yes, you come and identify trap volume and all of sort of stuff, but you don't trade up till the news have traded. Okay, so look at this, guys. There are 3 questions you should ask yourself before the session begins. Who is trapped? What news are on the calendar? And then am I in a trend, an explosive trend or whatsoever? Okay, so look at this, guys. Who is trapped? Okay, we know we had news at around 4 p.m. South African time. In US it's around 10 a.m. Okay, so these guys are trapped. Why? Because everybody who sold below the high is trapped. Okay, so I will say these guys are literally trapped when the session is opening here, because these guys are at a negative when the session is opening here. However, they are news and we're not going to do anything. Are we in an explosive trend or in any form of a trend? Yes, it seems like we are in an explosive trend. Why? Because an explosive trend will be identifiable using two trend lines at different levels. So of course we are in an explosive trend, okay, but we need to see, okay, we need to see, because even if we are in an explosive trend, again we need to find the pattern that gives us the entry, or we can trade the explosive trend itself, but we need to be aware of what is happening. So yesterday we had news, and this is the news candle. As you can see, this is Nasdaq, guys. I took US30 and I'll share with you why. Okay, this is the candle that opened the news. Okay, so we don't trade up until the news have traded. By the way, after the news have traded, you can already see that, oh, they broke this trend line, so they have rendered this explosive trend invalid. Okay, because when you are trading, you need to know, oh, I have a chart pattern, is it valid or invalid? Okay, and as they are trading, they will tell you if your chart pattern is valid or invalid. That's why I say it's important to know what you're looking for. If they do this, then you do this. If they don't do this, you don't do that. Okay, so this is where the news actually traded, and you can see they broke the explosive trend line, therefore it is invalid. Okay, so now we need what? Here are the criteria. Okay, we've identified trade volume. Okay, we need to have 65 to 70. Let me just put 65 here. We need to have 65 to 70 pips from where the evidence candle has been given, or from where the opportunity has been given, to a point whereby they will release trade volume if they reach that point. Okay, I think and believe this is not complicated. If you watch this repeatedly, because I'm sharing this mostly on my videos, if you watch repeatedly, you'll understand the trade volume. It's very important to know, because there are days when they will bring you all the way into trade volume and then reverse, and you'll realize that you just became trade volume yourself. Okay, there are days when they will lead you into trade volume and then stop hunt and then reverse. Okay, if you don't have in more than 50 pips up to this point, if they are going to stop out, you might realize that no, they didn't give you a 50 pip and they reversed. Okay, and there are days of course when they'll break up and keep trending. But look at this, guys, look at this. With Nasdaq, they gave a beautiful pattern. Okay, they gave a rectangle. And remember, for our patterns, you need a pattern that has at least 3 touches. Okay, 1 2 3, 1 2 3. If it doesn't have 3 touches, or the third touch will be a breakout, or the third touch will be a breakout. Okay, or the breakout should be the third touch. In other words, there must be 3 touches on both levels. Okay, so if you look here, the bodies, it touched, it touched, it touched. Yes, here they used the wicked touch, but we are using the bodies here. They touch, and then that's where they gave a big candle. This is not an evidence candle. Why? Because this candle did not break out as an evidence candle. Look at this candle. This candle is not an evidence candle because it has a lot of selling pressure on it. Okay, I mean buying pressure. You see, it pulled back and closed as a pin. Had we gotten a candle like this when they broke out here, it would have been a good opportunity, except that we would have say for instance, we would have less than 24 pips for traders to be released. So I don't take these trades. Okay, why? Because we are trading into trap volume. Okay, remember I told you we need 65 pips from where the opportunity is given to the point whereby they will release traders. So on this one, it wasn't a good one. Why? Because we did not have enough space. Okay, so this is why I didn't take this one. But look at what happened later. Yes, they released the traders. Okay, so once they release them, that's when I can take an opportunity. Why? Because now I know that they have released them. Okay, so I wait for them to be released if I don't have roughly 65 to 70 pips. Okay, so look at what they did later. Actually, they started creeping. I can put it here because this is where we had more touches of the bodies. Okay, so look at this. They broke down and they started roughly creeping, and they broke here with an evidence candle. Now this is what I mean when I say an evidence candle, a big candle that breaks out of the pattern. You know why they use a big candle? Because everybody who went up is at immediate losses, and the best they can do is actually close. But we know most people are not going to close losses. Therefore, what they're going to do is to rely on hope. They're going to pray, oh God, please let prices come back to break even so that we can exit. They know they are wrong, but they don't want to exit at a loss. Okay, so that's where we need to capitalize on, because our job is to punish those who are already trapped. Okay, why? Because we are trading in line with market makers. So guys, it's all about patience. Okay, it's all about patience. Look at this, so beautiful. Okay, and some of you will say, oh, but we don't have this trend. You do have this. You see, this is the playbook. I drew the trend. Prices explode down, then they start creeping trend, and then the prices, okay, they are more likely to bounce and then go down. But look at this. In this creeping trend, prices initially drop sharply, then there's a brief creeping trend. Okay, just remember, if there's a big drop in prices followed by a creeping trend, it usually means prices will keep falling. Okay, these kinds of trades are some of the simplest you'll come across. So guys, this is easy trades. When you talk about something that's easy, we are talking about this. Okay, where they break down heavily, now they start creeping, then they break to the downside. But again, I will tell you that the creeping wasn't that clean. Okay, for this one, it wasn't that clean. I told you, compare the indices, open S&P, open Nasdaq, open US30 at the same time, and then take the easiest one. So you see, when this one was given, we didn't have any evidence candle. So again, we were not we were at a point whereby they were going into they were already in trap volume, but we didn't have roughly 65 to 70 pips before trap volume could be released. So this one wasn't fully met, therefore we cannot go to the other ones because this one was not made. Okay, so look at this was perfect, but again, I told you, take the easiest one. Okay, let's go to S&P. With S&P, it was a little bit different, because look at this. With S&P, already we had news, guys, okay, let's take it back and see who is trapped. Okay, let's see who is trapped. Okay, you can see the session is opening here, and as the session is opening, we are in the middle. Unlike in Nasdaq, if you look at Nasdaq, look at what happened on Nasdaq, guys. Look at what happened. The session is opening here, therefore everybody down here is trapped because we are opening up here. These guys are at a loss. But when you look at S&P, you realize that the session is opening roughly in the middle. Okay, roughly in the middle. There are people who have been taken up, and there are people who have been taken down. So we are opening inside trap volume. So when we are opening inside trap volume, we can't say who is trapped. Okay, so we continue. Are we in a sort of a trend? No, there's no, like we don't have two trend lines, because that's the most easiest trend that to identify before the session begins. However, you will be able to identify or might be able to identify other trends as the session is progressing, okay, as the session is progressing. And I know this concept of trap volume is making things hard for people, but guys, remember, you need to have the edge on your side, okay? Look at this one. With this one, it was a little bit different, okay? Because look, I told you you need at least 3 touches. Look at this, okay? I want to show you the difference between these things, because guys, it's all about comparing and taking the easiest one. You already know that we're not going to execute before the news, so we allow the news to actually trade. Why? Because the news are going to bring unexpected volatility. Imagine if you are in this trade and it's winning and your take profit is here, and maybe your stops are here, they come and close you. That's something you don't even need, okay? That's something you don't need, okay? So look at this, guys. We got a rectangle. I don't wish to make things hard, but I know the concept of trap volume is making things hard for people, because people are struggling understanding trap volume. But remember that you just need roughly 65 to 70 pips from where the opportunity is given to where they will release trap volume, because some days they won't release them. You just need to be on the safer side. That's all, okay? Okay, that's all. So if you can't identify trap volume, it's still okay. Look at this. We got a rectangle. Okay? And then we got this is the body. You see 1, 2, 3. Okay, this is roughly 1, 2, 3. We have multiple touches at the top, okay? We have multiple touches, but okay, let's see this. Look at this candle. This is not just a small candle that breaks out, okay? This is not just a small candle that breaks out. This is a huge candle that broke out, but I had some concerns with this candle, and my first concern was it had a wick below. So when a candle has a wick like this shows a buying pressure, okay? So it's not my favorite, okay? And this candle was too big. From where it closed all the way to the back inside, it was roughly 35 pips. So I wouldn't take something like this, hence I didn't take this one, okay? And then again, yes, they bounced back, and that's when they gave another beautiful candle. But if I'm say, maybe if I took this one, if I'm gonna add, I want to add when they have surpassed at least this level here, okay? But this wasn't the best one for me because of this candle, and it was too big, okay? Even the second one was still too big for me, because look at this. Now this is 40 if I'm gonna put above the recent string, and if I'm putting here, yes, it was 25. But again, guys, I prefer my stops back inside rather than outside, okay? So this one I didn't take it. And again, you can see they exploded down, and after exploding down, look at what they did. Yes, they creep, but okay, the candle that broke out of the creep wasn't an evidence candle. Yes, they pulled back, but this candle was already 50 pips, okay? But there's something interesting that actually happened, okay? There's something interesting that happened. So I didn't take this one because of the reasons here I'm sharing with you, okay? Because the candle that broke out of here, yes, it's a breakout candle, but I'm not just looking for any breakout candle, okay? I'm looking for a big breakout candle. And when you look, oh my god, this is the one I took. I love this, okay? This is the one I took. Let's see who is trapped. Okay, as you can see, this one again is opening in the middle. They send people up and they send people down. The session is opening in the middle, so we don't have trap volume. Why? Because the guys up could be trapped, the guys down could be trapped. So if it's like that and we are opening in the middle, obviously we don't have trap volume. Okay, are we in maybe something like an explosive trend? No, we are not in explosive trend, because this is only one trend line, okay? And even from the top, you can see we don't have anything like an explosive trend, okay? I want to show you these things, and I forgot to show you something on S&P 500 and Nasdaq. Something you should pay a close attention to is, look at this. They are trapping into the levels, then they explode away from the levels, okay? And if you look here, the same thing was happening, okay? Look at the levels. They are going to make things easier for you. You see, they are building a pattern on the high of the previous day, but they come later and they do what? They engulf the closing price. Oh, this is beautiful. Why will they engulf their closing price? This is beautiful, okay? So these levels are so important. And guys, here's one thing. The reason I use this strategy, or the reason I prefer this strategy over other strategies, is because you don't know what's going to happen, and you are not bringing your mindset on the chart. Somebody will say, oh, they've been going down for a long time. Now I need to take this one. No, you don't take this one because there is no pattern, right? You don't take this one because there is no pattern. And you don't say, oh, because they've been going down, now I need to counter trend. No, it's not a matter of counter trending. Remember, the markets don't really have a high and a low, okay? All that is just an illusion, okay? Prices, You can't say prices have fall and have been falling for a long time. No, 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 you can't say that. What are they showing you? You see here, they showed us a trend. The same trend I've showed you right now in the playbook. Unfortunately, people don't read this, or you read and forget. You're gonna see these things over and over and over and over again. And if you master them, this is only 53 pages, guys. Everything here is gonna keep on repeating over and over and over and over again. Your job is just to make sure you master these things and you train your eye through back testing on seeing this. That's why I always say the secret is to back test. Okay, the secret is to back test. If you don't back test, things might be very hard for you. You might not see these things. Okay, the secret is to back test. Okay, so now let's just go to my favorite one, the one I took yesterday. As I told you already, we don't have trapped volume because the session is opening and in the middle. Okay, now what's our job? To wait for the equity time. Oh, okay, but we have news, therefore we have to wait for news. Okay, we have to wait for news. Why? Because we have news during the session and we don't do anything until the news have actually traded. Why? Because news will bring unexpected volatility and they might just wipe you out of the trade and you can't possibly know which direction news are going to take. Okay, so this is the one I took and the reason was so clean. Look at this, they explode to the downside. After exploding to the downside, this was the perfect one. That's why I'm telling you, try to actually compare this ones and take the easiest one. You see what happened on this one? Look at what happened. Up, up, up. Okay, breakdown, up. What did I say in the playbook? Break down, explode down, creep, 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 continue. Okay, guys, I can't explain the importance of these things that I've written here. They happen over and over and over again, and when they happen, you're gonna say, oh wow, it's there, but you didn't take it. Okay, the problem is you haven't mastered fully. You see, now this is an evidence candle. When we talk about an evidence candle, this is an evidence candle. The minimum target at least will be somewhere here. Okay, this is the evidence candle. If you took this candle over here, let's see, you see, this is roughly 58 pips. You got paid. You got your 50 pips. It's not about how big the move is. It's just about where are you getting the opportunity. Okay. So guys, just because the market has been moving maybe 200 pips and you think, oh, they've been going down, 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 they have to reverse. Guys, you don't take a reversal until they tell you through a chart pattern. Okay. That's highly, highly, highly important. And I'll never emphasize that. Okay. Look at this again. If you didn't see this, look at this, look at this. There was something like you see this one here, there was something like this. Okay, and there was something like this here. Look at this, look at this. Okay, let me remove this line if people didn't see this. Look at this, look at this. Okay, I told you, one, two. Okay, this one is almost a touch because this, you see, almost a touch, three, and this is the candle that broke out. Okay, or else you can say one, two, the third one is the breakout. Okay, but look at the candle that broke out. This is a big candle. Look at it, look at it. It's a big candle. If you doubted it, you take the second one. Okay, so guys, if you look at this again, this was a very beautiful opportunity. If you miss this one, it's still okay, it's still okay. Look at what transpired later, but I don't trade this late. Okay, but look at what transpired. You don't do anything until you have a chart pattern because you don't even know what they're doing. They can be falling, but it's none of your business if you don't have a chart pattern. Okay, look at this. They do this and then they give a mini pattern. Most of the time they will give a mini pattern when they break out. Okay, look at this, guys, and look at the engulfing candle that you got. Okay, look at this. Okay, but this pattern is not there. Yes, the pattern is there. I shared these books with you. I told you, if you read Shabaka's book, I told you this, and I'm gonna tell you this again. If you read Shabaka's book, you'll see all this thing. It's called a the symmetrical inverted triangle. You see, this is the triangle. It breaks out, it goes. You're gonna say the patterns are not there because, guys, you are not reading. Guys, remember, if you really want this, it depends on how bad you want this. If you really want this, you'll put in the work in reading and backtesting. This is important. This is a huge business and it's a complicated business. Therefore, you must put in sufficient work. Remember, I told you, you spend roughly 3 years studying for your profession. Where you have a job description, you already know if this is this, I do this, because you have everything given to you. Okay, it's nothing new. Okay, but here you have to make decisions on yourself without a memo, without a job description. This is where you have to use your mind and what you know. So please invest into knowing so that you know what to do. Thank you.